Good morning. Today we have announced the results for financial year 2020. Funds from operations was up 17.6% to $54.8 million, or 1.6% to 19.3 cents per security. Statutory net profit increased $25.6 million to $54.8 million, driven by growing rental revenues and $24.4 million of revaluation gains. Clearly, impacts stemming from COVID-19 have been a big focus for us, and I'm pleased to report that we collected 98% of contracted rent during the period and had less than 1% arrears as at 30 June 2020. For the avoidance of doubt, revenue was not booked or accrued for any of the tenants we provided rent concessions for during the period. Net tangible assets rose 4.1% to $2.82, with cap rate compression of 22 basis points and 4 basis points being reported for the first and second half, respectively. In early March, we refinanced $36 million of debt and also increased our available lines by $10 million, providing us with 18 months until the next refinancing event. Gearing at period end was stable at 28.8% and interest cover very strong at 6.9 times. And it was this conservative balance sheet position that provided us with the confidence that we didn't need to raise dilutive equity during the highly volatile period in March and April. And indeed, it allowed us to take advantage of an opportunity to buy back our own securities at a 16% discount to NTA, an initiative accretive to value and earnings. With regards to leasing, each period I talk to you about APN's ambitions to work with our tenants, and I'm pleased to report that the groundwork we have undertaken over the past few years is bearing fruit, and we signed a record number of leasing deals. This included 17,300 square metres across the industrial assets and over 11,600 square metres at Brisbane Technology Park and Rhodes, with 53 leases being completed in total. Since the onset of the pandemic in March 2020, we've completed 14 leases and continued to see demand from small users who have been an active target for our business since 2018. In a challenging environment, I take a lot of comfort that our team is engaged with our client base, and I believe that our excellent rental collection numbers also benefited from our collaborative approach. Our commitment to sustainability continued, with over 600 kilowatts of solar being installed, and we have generated double-digit returns from these investments, whilst also preventing 3,800 tonnes of carbon emissions from entering the atmosphere in the coming financial year. Our approach is a key talking point with a growing appeal for both investors and tenants, with clear financial and environmental benefits. During the year, we remained disciplined when seeking out opportunities to deploy capital. We assessed over $1.4 billion of opportunities, largely in the industrial and logistics sector, submitted offers on $380 million of real estate, and acquired $57 million of property. You should expect much of the same from us this financial year, and for us to continue to consider opportunities that are relatively unique and leverage our demonstrated asset management capabilities. The guidance for FFO and DPS in financial year 2021 is an outcome broadly in line with financial year 2020, subject to market conditions continuing and no unforeseen events. Whilst there will be opportunities for us to outperform through asset management and capital deployment, this guidance statement is supported by 95% of the rent roll coming from companies that are ASX or globally listed, national or multinational or even government tenants, and reflects a 7% distribution yield based off the current trading price. Should you require further information on APN Industria REIT or APN Property Group, we have provided the relevant links below. Thanks for your interest, and I look forward to the opportunity to speak with you shortly.